Hey, good afternoon. Welcome to the Wealthy. This is episode 51. I am Lexi Johnson. I am a financial coach and strategist and so many other things, but that title is the one that's relevant here today. I am so grateful that you are joining us. So, whether you are joining us live or you're watching the replay, let us know who you are and where you are watching from. If you caught last week's episode, we began talking about gold and silver and what part of your portfolio it should play a role in related to emergencies, right, and disasters. So if you did not see that, uh, episode, make sure that you go back and check it out. You can check it out on YouTube, Money Mastery for Her, or you can, if you are in the Facebook group on the Money Mastery for Her Facebook group, you can check out the episode there. All right, so today we're continuing our discussion on gold. Last week I promised you that I would come and talk about, I think I said specifically the difference between gold mining companies and gold royalty companies. So we're going to talk about that, but it's going to be included in this larger discussion of different ways that you can invest in gold, right? Now, I'm just talking about gold, but this also applies to silver and, diamonds and other commodities, right? But I'm talking about gold specifically today. All right, so we've switched things up a little bit. We used to start out giving the crazy money story, and we've switched it with another segment, which we're doing the Kingdom Money Moment. And maybe at some point, in the future, that the crazy money stories will come back. Maybe we'll have both segments, but I think it's really important right now that we have this Kingdom Money Moment segment so that we really begin to share with you all the truth about what the Word of God says about money, right? So, without further ado, I always have to adjust this camera. Without further ado, we're going to have our Kingdom Money Moment. And, there are people who ask the question like, well, why is money so important to God? And the truth of the matter is that money isn't important. Money itself is not important to God. But what's important to God is our attitude towards money. What's important to God is our handling towards money, right? So one of the things that we want to make sure that we understand as kingdom citizens, as kingdom believers, is that our beliefs about money is radically different. Okay? Not a little bit different, not halfway different. It's radically different from the world. In fact, it's not just that so different, but the views really are diametrically opposed, right? So let me give you an example. First of all, we understand that we have two kingdoms, okay? We have the kingdom of abundance and we have the kingdom of lack. If you want to know which kingdom you reside in, okay, because you have to make a decision, you got to decide which kingdom you want to live in, then what you can do is just assess your thoughts and the place from which your thoughts are coming from, okay? The kingdom of abundance is God's kingdom. The kingdom of lack is the devil's kingdom, okay? So, for example, you might receive, a lump sum of money. It doesn't have to be something very high. Maybe it's $500, maybe it's $1,000. And the way that you decide what you're going to do with that money really, really will give you an idea of what kingdom you reside in, okay? So those who reside in the kingdom of lack may say, oh, I need to hold on to this, right? Because it may never come again. So you're trying to hold on to it, trying not to use it, trying not to, and you actually have that feeling when there is something that's needed. You're like, need to hold on to this because this may never come again. right? Whereas a person who resides in the kingdom of abundance will say, okay, this needs to be done. Let's spend the money. We'll make it again, right? Kingdom of abundance understands that there isn't scarcity, not when you are part of the kingdom of God. There's no such thing as lack in the kingdom of God. There's no such thing as scarcity. In the kingdom of lack, there is scarcity, right? So you operate out of that mind frame. So this is why we say that money beliefs are radically different. They're radically different. Okay. Um, it's two diametrically opposed mindsets. And you're either operating from scarcity or you're operating from lack. I'll give you one more example, then we'll move on to our topic of the day. All right. When it comes to money and how the world teaches you about money and how to accumulate money and all of those things, at the underneath that, the foundation of that is taking care of number one, taking care of self. Okay. That is the world's way. But in the kingdom, we understand that money is just a tool and that money is not just for us. Okay. That we are called to give to the poor. We are called to make sure that others have, okay, and not just other kingdom believers, but even the Bible calls them foreigners, even foreigners, people who are not part of our land. Okay, now you can take that as the physical geographic land, or you can take it as we're talking spiritually again, kingdom of God and kingdom of lack, right? Kingdom of Satan. So those two things are diametrically opposed. One says, I'm going to get all I can get, and this is for me and mine. And the other says, yes, I'm going to get all I can get, but it's not for me. Okay. It's not simply for me, it is for giving to the poor. Okay. And poor doesn't always mean financially poor. Okay, there are other ways of being poor, but we're not going to get into that because this is just a kingdom money moment. Okay, so I hope you enjoyed that moment. We are going to now get into our topic. Hey, Mom, good to see you. We're going to get into our topic for today, which is different ways that we can invest in gold. Again, you may want to go back to last week's broadcast where I talked about the importance of having gold and silver in your portfolio. There's two ways that you can have it in your portfolio. You can, you can invest in stocks, bonds, ETFs, that kind of thing, and and they usually say 6 to 10% of your portfolio that way. Last week, I talked about the importance of having it in as part of your emergency fund, right? So we talked about there should be a portion of your emergency fund that's in cash at the bank. There should be a portion of your emergency fund that is in food and supplies for emergencies or disaster. And then there is a portion of your emergency fund that should be in gold and silver. Okay. Why is gold and silver, other commodities, a good investment? Because they are a hedge. What is a hedge? A hedge means that they protect. So while other investments may not be doing so well, gold and silver hold its value over time. Okay, they hold its value over time. And so we said in emergency situations, whether it's financial emergencies, whether there's a recession, whether there's whatever, a pandemic, whatever is going on, the value of the dollar can drop. In fact, it doesn't even necessarily have to be a disaster, right? We know that we have been shifting to digital, digital networks. So the central banks rolled out the Fed Now system last year. I don't have time to talk about that. I did do a couple of episodes on that last year. And so they rolled that out last year. And now, a lot of banking and things. be done a lot more digitally. You're going to see less and less the use of the dollar. And then our government is working on its digital coin. Some countries already have its digital coin out. This is to compete with like crypto. So the more that they are finding other ways, is remember all of this is man-made. The fiat currency that we use is man-made. So the more that they're finding other ways to, other types of money, the value of the dollar comes down. And this is the importance of having gold or silver. All right. So today let's talk about what are some different ways that you can invest in gold. There are several options. Okay. And so we're going to discuss a few of them today. So there is the actual physical gold. Okay. So that is a gold bullion, could also be gold coins, gold bars, gold rounds. All right. And so this is what most people really think about or picture, when you're investing in gold. You always see those pictures of the bars, of the coins, of the gold, of the jewelry even. Okay. This is when you see the picture of the treasure chest, and the treasure chest is overflowing, with stuff. It's usually gold bars or jewelry or something that's hanging out of the treasure chest, right? This is even when you see movies about different types of bank heists, okay, and they go and they grab up the gold bars, okay. So this is you can invest in actual physical gold. All right. My husband and I, we have actual physical gold coins, gold bars. Okay. And so you can too. All right. And jewelry. I don't want to forget jewelry. We don't do the jewelry, but but you can, right? Um, Sometimes the thing about jewelry, sometimes the jewelry can accumulate some value over time. Um, Appraising it can be a little complicated, right? And obviously, there aren't any guarantees that you're going to be able to sell it for more than you bought it. Um, but that's the case with jewelry. All right, so you can invest in physical gold. All right, how else can you invest in gold? You can invest in gold stocks. Okay, so now this is not physical gold, this is paper assets. And so just like you buy any other individual stock, like if you buy a stock in American Airlines, I don't know why I thought of them, just pulling up stuff, right? Just like you can go and buy stock in American Airline, you would buy stock in a gold mining company, okay? Any investment comes with risk, right? So when you invest in a company, you want to make sure that you've done your due diligence, make sure that the company is a reputable one, make sure it's a profitable one. If there's a company that has, rising rates of return or pretty good, rates of return over time, all of these things you want to look into, right? You may also want to look into whether or not the company has an environmental responsibility, right? Because the company, they are miners. There's mining going down. So you might want to look at, hey, does this company take its environmental responsibility seriously? What are they doing to make sure that the environment, that they're not tainting the environment, things of that nature. So there are various different ways that you can vet a gold mining company. Okay. So this again is gold stocks. You don't have the physical gold in your hand. Okay. But you do have the benefit of an asset that you can sell at any time. Okay. Just like stocks, you can sell your stock on the market at any time. And this is the case with gold stocks as well. Okay. So gold stock, when you buy an individual stock, that means you're investing in an individual gold mining company. All right. So as I'm going through these, you're watching. If you have any questions, go ahead and put them in the comments. I will do my best to get to them during our 30 minutes, but if not, I will come back to those comments and make sure that I answer those questions. And that's for those of you who will be watching the replay as well. Okay, so what is another way that you can invest in gold? Well, you can invest in gold funds. Okay, so just like there are mutual funds or there are ETFs, you can get a mutual fund or an ETF that is made up of multiple gold mining companies, okay, or multiple gold related assets, okay. It could be companies that mine gold, it could be companies that process gold, it could be companies that do both. Again, you don't own the actual gold, okay, or the individual stock, right? Because remember, mutual fund is a collection of companies, and also mutual funds are a collection of investors, okay? So you don't own the individual stock yourself, and you don't own the actual physical gold, okay? But you have shares, okay, in these companies, shares in these, shares in the companies, okay? Mutual funds, ETFs have more liquidity, obviously, than the actual physical gold. And the reason why it has more liquidity is because, again, it's on the stock market. You can buy and sell at any time. Whereas with physical gold, the liquidity is not as easy. You would have to take it to a gold coin shop, or somewhere that will accept the actual physical gold. Now, if you watched the last episode, I talked about 5 states. There are 5 states who now are accepting gold as legal tender. Okay, tender. Excuse me, tender. Gold as legal tender. Gold and silver. All right. So I believe that there are going to be, more and more states who are coming aboard. The most recent state was the state of Indiana, and they made this decision in January. Okay. All right. So that's gold funds. How else can you invest in gold? Well, there are gold futures. Okay. So a gold futures contract, that is an agreement to buy or sell a certain amount of gold, and you would at a later date. Okay. The contract is what is exchanged on, the contract is what is traded on the exchange. Okay. Now, gold futures also have more liquidity than the physical gold. You don't have any management fees. They might charge a trade fee. Brokerages might charge a trade fee, but there aren't any management fees that like you would find in a mutual fund or an ETF. Okay. Trading futures does involve a lot of risk. First of all, let me just say this, that investing, period, involves risk. Okay. Nothing is guaranteed. I want to make sure that I say that. And I also want to say, while I'm at it with these disclaimers, that I do not know your personal financial situation, right? So if you decide to look into this and you decide to invest, make sure that you do your due diligence. Because again, I don't know your personal situation, and I can't make any specific recommendations. I can only make general recommendations, or just give you some general education really on the part that gold plays in your portfolio. Okay. So we're talking about gold futures, a lot of risk. I would not do gold futures if you're not a very experienced investor. If you're not very experienced, then I would invest in gold in one of the other ways that I talked about, which is mutual funds or ETFs, or investing in a gold mining company, or the physical gold itself. Okay. Because with futures, the amount of money that you can lose with those types of investments, it can exceed your original investment. And this is just futures in general, okay? Not just gold futures. This is when you are investing in futures in general. Okay. Um, so those are 4 different ways so far. The next way, I'm going to talk about a 5th way because I already talked about investing in the gold mining company. Okay. I'm going to talk about that again, that and a gold royalty company. But now I'm talking about it as it relates to holding physical gold. Okay. So remember what I said at the top of this thing, that the stocks, mutual funds, ETFs, futures, those types of things, those are good to have in your investment portfolio as a hedge. I would have 6 to 10%. This is just a general, educational thing. 6 to 10% of your entire portfolio should be in gold or silver or some other commodities as a hedge, okay, as a protection, so that when other investments aren't doing so well in your portfolio, then these tend to hold their value over time. Okay, so that's one thing. Then you have investing for emergencies. Again, we talked about this extensively last week, that a portion of your emergency fund, I believe, should be in gold and silver. And so when we're talking about having it as a part of your emergency fund, we are talking about the actual physical gold. Okay. And so you can invest in the actual physical gold, once again, through a gold mining company. Okay. Or you can invest through a gold royalty company. So what is a gold mining company? And what's the difference between a gold mining company, gold royalty company, gold mining company? They actually do all of the mining. They have all of the equipment. They're there at the mines. They're digging. They're doing that work, right? But a gold royalty company is a little bit different, okay? They don't have all of that overhead of equipment, and they are not the ones who are actually mining for the gold, okay? Instead, they have a contract, okay, with the gold mining company that gives the owner of that contract a right to a percentage of the gold production or the gold revenue coming from that mine, okay? These contracts typically cover the life of the mine, and they also benefit from the exploration that can go on throughout the life of that mine. And so for that reason, there can be an increase in the amount of gold or revenue that they receive from the mining company at no additional cost. Okay. So so owning equity in a gold royalty company, people generally, not all people, I'll just say some people, right, generally prefer this over investing in a gold mining company because of their low overhead costs. Because the gold royalty companies are geographically diversified. What does that mean? Because they will invest in gold mining companies that are in various different, regions and locations. Whereas if you invest in an individual gold mining company, they're in a particular location in a particular region. Okay. So with gold royalty companies, they are contracted with various different gold mining companies, various different geographical locations, multiple different operators. Okay. And so now they don't have costly exploration expenses. They don't have anything like that. And so they have greater leverage to the changes in gold prices, okay, than investing maybe just in bullion or gold coins or things like that. So those are some of the reasons why someone would prefer investing in a gold royalty company versus a gold mining company. Okay. As a gold royalty company grows, um, it has potential for multiple types of expansion. It has uh, potential for increasing dividend payments. They have the ability to execute some larger transactions, which also can accelerate their growth. And yeah, again, these are just some of the reasons why some people might prefer investing with a gold royalty company. Okay. Again, just like any other investment, you want to do your due diligence. So when you're looking at a company, any company, but today we're talking about gold royalty companies and gold mining companies, you want to check out their management. You want to check out, particularly for the gold royalty company, their asset portfolio, like who are the companies what are the gold mining companies that they are invested in? What other ways are they invested in gold? What is the asset quality? Okay. What is their jurisdiction? Meaning, where are they? Uh, where are they invested, right? And what is their valuation? Meaning, what is their company worth? Okay, so these are just some things that you would look at when you're going to invest in a particular company. Okay, so yeah, those are a few different ways. Let's review them again. So we talked about physical gold. We talked about gold stocks. We talked about gold funds. We talked about gold futures. And then as it relates to physical gold, we then talked about the difference between investing in a gold mining company and a gold royalty company. So I hope that this has been very, very helpful for you. We, by the way, are having we're having an informational meeting tomorrow for those who are interested in investing in gold. This would be physical gold. If you're interested in investing in gold through a gold mining company, we have a meeting tomorrow at 12 noon Eastern. Okay, so whatever time that is, wherever you are, that would be 11 Central. I think that is 9 Pacific time. And then wherever you are in the world, because you don't have to be located in the United States, you can be located anywhere. But we have a meeting tomorrow, 12 o'clock noon, okay, 12 noon Eastern time. You do have to register. The meeting is free, does not cost you anything, but you do have to register. And I put the link in the description, okay, so it's bit.ly/gold investor 2024. If you have an interest in investing in gold through a gold mining company, then come and check the meeting out. Again, it's free, it's informational. And then after you hear the information and you decide, okay, yes, you're very, very seriously interested, then, we'll talk with you about what are next steps. Okay. But we're having that meeting. That's tomorrow, 12 o'clock noon, EST, Eastern Standard Time. And you must register. It's free, but you must register. And the link for that is in the description. I guess I can also post it here in the chat as well. So let me do that. I know I can't multitask well. So, all right. So that is the link. And so click on that link, register, and then we'll look forward to seeing you tomorrow at that meeting. Oh, also, let's say you're like, I'm interested, but I can't make the meeting at that time. If you are registered, you will get the replay. Okay. But you must be registered. Okay. If you are registered, you will get the replay. All right. Well, that's all that we have for you all today. Other than the meeting tomorrow, what else is upcoming is in the description. We've got quite a bit going on, so check things out. Get in where you fit in, right? And we'll see you next week for another episode of The Wealth Seed. Bye.